Good afternoon. I am Dr. Deepak Torawala, and I welcome all viewers across the country under banner of Family Physician Associations Federation (FFPAI) and Dalal Street Doctors in this webinar series of FFPAI Financial Fridays. As all of you know, that this series we have started to improve and acknowledge our members' knowledge in various products of insurance and wealth creating. First episode we have broadcasted on 15 December, in which various insurance cover one should have, and it was discussed Mr. Hussain Kachiwala in a very lucid manner. Today, we have invited another expert from this field, Mr. APURVA Shah, and we are discussing today about the mutual fund, for role of mutual fund in wealth creating. All of are knowing that our saving and smart saving smartly in investment, we can only create wealth. So there are many products like equity, mutual fund, bank interest, government bond. So according to one need and according to one's goal, we have to allocate in different category. So today we will discuss about the mutual fund, and I request Dr. Vinod Shah, moderator of this series, to introduce our today's speaker. Dr. Vinod Shah, please, sir.
Respected President FFPAI, Honorary Secretary Dr. Pragnesh Shah, Dalal Street Doctors, our brainchild of Dalal Street Dr. Hiral Shah, Vice President FFPAI Dr. Torawala, today's speaker Mr. APURVA Shah, and friends. I am very happy to introduce Mr. APURVA Shah, who is the investment product head at the NJ Wealth. APURVA Shah heads the investment product at NJ Wealth. His key role is to identify the business opportunities through the right investment product for the investors to build a long-term wealth. We family physicians are really very poor. We hardly knows in detail regarding it. He is also responsible for product promotions and cordial relationships with the MCS, along with a rich industry experience of more than 19 years. His diverse experience of managing sales in different geographies like Vadodara, Delhi, NCR, and South Gujarat. Prior to his current role, he was the regional sales manager of South Gujarat. His education includes BCom, MCom in banking from MS University of Baroda, Gujarat, and postgraduate diploma in finance management from Rajendra Prasad University of Mumbai. A very learned, very experienced person in the field of finance today with us to give us some highlights regarding the mutual fund and its detail. May I request Mr. APURVA Bhai, please start your lecture.
Thank you. Thank you, Vinod Bhai. Thank you, Deepak Bhai, Hiral Bhai, and everybody at this Doctors Association. And I really thank all of you for giving us the opportunity to interact with all of you. So आज का जो टॉपिक है वो म्यूचुअल फंड्स के बारे में बात करने का है. म्यूचुअल फंड से कैसे हम वेल्थ बना सकते हैं, बिल्ड कर सकते हैं, राइट? तो ऑब्वियसली आप सब आई थिंक ज्यादा लर्नेड है जो मैं मानता हूँ, बिकॉज यू आर इन अ वेरी नोबल प्रोफेशन. All of you are very, very experienced and experts in your field, and we really respect your profession and the service you do in the entire society, right? So thank you all for inviting me today, and very happy new year to all of you. for the new calendar year 2024. So जैसे सर ने बताया काफी सारे प्रोडक्ट हैं इन्वेस्ट करने के लिए, तो इक्विटी है, म्यूचुअल फंड्स हैं, एफडीज है, पोस्ट है, तो विच काइंड ऑफ प्रोडक्ट वुड बी बेटर फॉर आवर फाइनेंशियल फ्यूचर, so that we will talk today, right? And this is the new year. I think today is the 5th day, so obviously we should take better financial resolutions overall. So I think I would definitely start my presentation with the important resolutions we should take in the overall financial investments, right? So I'll take few questions we generally receive from the investors on a very regular basis, not in a specific period. So those all questions would be actually covered in terms of all we should know about the financial investments and savings. So I hope आपको कुछ भी उसमें बीच में, if you want to interact, we can interact, or at the last also we can keep question and answer. So अभी ये ad आप काफी टाइम से अभी देख रहे हैं, पिछले 6-7 साल से it has become very popular in the social media and the TV media also. म्यूचुअल फंड सही है, कैंपेन इज देयर, बट ये कैंपेन अभी हो रहा है, इसलिए म्यूचुअल फंड सही है कि नहीं, वो आई थिंक ज्यादा इंपॉर्टेंट है समझना, बिकॉज सेलिब्रिटीज आर नाउ डूइंग दिस कैंपेन. दैट्स नॉट द ओनली रीजन व्हाई म्यूचुअल फंड सही है. म्यूचुअल फंड जेन्युइनली सही है फॉर ऑल काइंड्स ऑफ इन्वेस्टर्स. सो लेट अस लुक एट व्हाई म्यूचुअल फंड सही है. So if you look at last 25 years history and experience of mutual fund equity schemes, तो जो schemes ने equity schemes ने mutual funds ने 25 साल complete किया है, ऐसे there are 37 equity schemes, right? So with different mutual funds, all mutual funds have different equity schemes, and there are 37 equity schemes now in India which have completed 25 years, and we have an experience of those schemes. Now, if one would have invested 1 lakh rupees 25 years back, now the average value of that investment of 37 equity schemes has been now close to 79 lakh, which 10% XIRR is every year investor would have received the return of 19% in the schemes. So this is the average returns in these all schemes. So some schemes would have definitely generated lower returns, or some schemes they would have generated higher returns. And this 19% is not just for 1 year, 2 year, 3 year, 5 year. It is of 25 years compounded return, which we should look at, compounded annualized growth returns, which is CAGR, right? So that is extraordinary kind of returns which we would not have received in any other financial product. Now, if we look at 10,000 rupees of SIP, SIP systematic investment plan, all of you would be aware what SIP is now, because it has become very popular. 10 years back, probably it was not a very popular concept, but 10,000 rupees SIP someone would have started 25 years back, then average value in this equity schemes would have been 3.72 crores today, with 17.58% of compounded annual growth return, right? So, sir, ये Hindi या English, which would be comfortable? Sir, English is fine with all of you. Sorry, I did not ask this question earlier. If somebody can...
English is fine. English is fine, sir.
Right. Thank you. So these returns are phenomenal, but ये returns, everybody is not making these returns. So all investors who have invested, or past में all investors who had invested in the mutual funds, they might not have received these returns in the past, just because the patience which requires to be invested for a long period is extremely difficult, right? Everybody wants immediate returns, and very few people understand that this kind of returns could be made only with patience in a longer period. So those things are critical to understand. Everybody knows that mutual fund equity schemes generate good returns, but very few investors generally can make good returns over a period of 20-30 years kind of periods, right? So let us look at few questions normally we receive. First question is like, volatility is too high. Probably this question is not relevant in last 2 years, but normally if we look at 20 years, in my last 19 years of experience in my career, and with NJ, in fact, I'm completing 19 years, I think, within few months. So I have not seen this question in bull markets, but this question is very prominent when there is some correction in the market. Just 10 days, 15 days back, there was some correction in the markets, right? Very few percentage fall was that, but few investors started calling was volatility has started, right? So generally, this kind of volatility has been always there. And even if we look at the kind of the most successful player in the history, cricketer, batsman, Mr. Sachin Tendulkar, his experience has been glorious track record, right? So we all know the different kind of numbers he has seen in his career. But if we look at the batting performance of his Test cricket, and if we look at the batting average of last 10 innings, right? So blue line is last 10 innings batting average. So last 10 innings batting average has not been always great with even the kind of batsman we have seen in our history, Mr. Sachin Tendulkar. Even he has seen very low and he has seen very good times also in his career, right? So you can see few years like 2016 or some like 2016 but 2006 or 8 kind of years, or many other years where he was not having his good form, right? So always everywhere we can see the kind of performance or the kind of volatilities has been always there. In fact, in your profession, that heart rate, when we check in your monitoring system in the hospitals, I think it is always volatile. And once it becomes flat, I think it is always a risky sign. So the same way, I think market also has been always volatile. This is a slightly technical slide, but Sensex graph is there. Like from 1991, Sensex has been growing just because the corporate profitability has been growing. So the table you can see the companies which form Sensex, right? The earnings of those companies have grown by close to 12.5%, and the Sensex price, means Sensex value, has also grown by 13.5%. So the kind of similar growth equity market sees normally in a longer period. So what I want to try to explain from this slide is that equity growth, equity market growth is clearly correlated with the growth of profits of the companies, and profits of the companies is correlated with the growth of economy. So when companies make profits, the shares of those companies demand goes high, and when the demand goes high, prices also go high. It is just like the vegetable market. When tomatoes supply is excellent, then prices is in control. But when tomatoes supply is not great, if there is a scarcity, the price generally shoots up. So similarly, equity market also works in the same way. When there is a good growth, when there is a good growth in profits, more people come to buy those businesses, and the equity share price goes up overall. And when there is not good growth in the profits, or there is a loss making company, then more people generally come to sell those companies, and the price, if we look at the longer period like 5, 10, 15, 20 years, generally equity price generally follows the profit growth. So normally what company makes profit growth, that's the only percentage of growth in the equity price normally we receive. Now if we look at the inflation part, which is very important to know and understand in the savings, so if you look at the inflation since 2005, this is gold price, petrol price, and milk price. So if you look at inflation, you just can see petrol and milk price, generally inflation is 6, 7, and gold has generated 13%, but this growth is just for 18 years. If we look at 30, 40, 50 years of gold price and inflation. So inflation is mostly similar to the gold price increase, right? So I think inflation is very important to understand when we look at the long-term investment. We know that once when Tata Nano was launched, it was with 1 lakh rupees price, and when I think the production was stopped in 2020 or 19 or 21 maybe from Tata, the price was at that point of time was close to 3 lakh rupees, right? So 1 lakh Tata Nano became close to 2.5 lakh to 3 lakh, the same car, right? So it was just because of inflation. So if so inflation is 8-9%. Even generally, if we look at 20, 30 years of track record into the bank FDs, so this is gold price movement. This is the, I think, track record of close to 25 years, 1998 to 2023. So you can see 1 lakh. So the price of any product of rupees 1,000 has become 3,861. So inflation has been 5.5% since last 25 years. So three and almost 4 times it has grown the prices of the products. And in the similarly, if you look at the gold, silver have generated close to 8, 9, 10% returns, the kind of returns, but FD and company FDs have generated close to 7, 8% return. But relatively, if you see equity, where we look at, I think it has generated more than 13% of returns, and compounding has made this value of rupees 1,000 as 22,500. So 22 times value has grown with 13% of equity return, and gold with 10% returns value has grown just to 11 times. Right? You can see the kind of compounding it is growing, and we have not kept mutual fund equity schemes here, but when you saw mutual fund returns in the previous slide, the returns of 1,000 rupees in investment in 1998 probably would have become close to 80 lakh rupees. So 80 times growth has been seen in the mutual fund equity schemes with close to 18, 19% of returns. So inflation is always there, has been there, but if you want to grow your money, I think we need to invest in the products where there is higher returns than the inflation, right? But these higher returns always come with some risk and volatility, and I think patience is rightly important to remain invested in the volatile times. More importantly, because in good times everybody starts investing, but in bad times most of the people generally lose patience. In fact, some of the people lose patience and they generally come back even at the peak time, right? So generally this happens in the equity. So this is the power of compounding. Already I just discussed about this, that 1 rupee, if we compound or if we grow this 1 rupee at 15% returns every year, then it becomes 2 rupees after 5 years. Rule of 72, you can always Google it. Rule of 72 is a very famous principle in finance. When every 5 years money gets doubled if the returns are 15%. So 72 divided by the rate of return is the number of years your money would get doubled every that particular period. So 1 rupee would have been 2 rupees every after first 5 years, and that 2 rupee becomes 4 rupees in first 10 years, and the next 5 years it becomes again 8, and similarly if we look at after 30 years, that 1 rupee becomes 66 rupees at 15%. So compounding plays a critical and important role. The sooner we understand this, the sooner we align our investments accordingly, right? Generally, people start investing in mutual funds, equity schemes, that let us start with some small portion, right? And they generally understand that this is a good investment avenue, and after 5, 10, 15 years, they understand the power of compounding and the power of mutual fund equity schemes. Then they start investing more, right? So I think sooner we understand, sooner we would allocate more equity allocation or mutual fund schemes allocation for a longer period of time and investment. So volatility always would be there, but I think to reap the right compounding benefit for a longer period, we need to understand the volatility rather to avoid the volatility, right? So another question we generally receive is market kya lagta hai? What do you feel? Where will market grow? And I have never seen the times when this question gets stopped, right? Even in the good times, even in the bad times, even when markets are at the low level or the peak levels, every time, every day, this question moves around in the heads of the people, because everybody wants to know what will happen in the market, but nobody can predict the short period of market movements. But in a longer period, the direction would be always same, that the percentage growth in the corporate profits and economic growth would be the similar kind of returns in the equity mutual fund schemes. So if you look at again the same thing, that we cannot predict next 5 months what will happen, pre-election or post-election, or any macro events happening or not, right? What happens with China or any other country geopolitically, what would happen, or oil, dollar, we don't know these macro factors. And generally after 19 years, we if we want to understand what are the learnings of our in fact being in this industry, the learnings are that to avoid the noise in the industry or the TV channels or the news things, right, that we should not look at the short term sentiments and short term news, because if we'll again look at 25 years of a longer period, everything has happened in these last 25 years of time, right? Most of the things have happened. In fact, the biggest subprime crisis happened in 2008-9, when markets went down by close to 60%. Even mutual fund equity schemes, NAVs in some of the schemes went down by 60% in just 1 year time. So we have seen all kinds of things, different governments and different things. Still, discussed earlier, mutual fund equity schemes have delivered phenomenal returns. We do not need to look at markets every day, or we do not need to look at the NAVs every day, that what is happening economically or equity market wise, or what are the ups and downs in the market, or what sectors are good, what sectors are bad, which stocks are good or bad, because we don't want to have 30-40% kind of returns. Even Mr. Warren Buffett, who has been the biggest guru in terms of equity, and in our industry he's been termed as the biggest guru, he's still there and he's living legend right now. He has also made a kind of 18-19% kind of returns in his entire career, right? So the biggest person who tells every time, his quotes are also there. He tells that, boss, if you don't want to invest less than 10 years in equity, don't come to equity, right? So he knows that, right? And even his with his expertise and experience, the biggest equity investor and guru in the world also says has the experience of generating the kind of returns our Indian mutual fund equities have generated. So these are the fantastic returns. We don't, if we are having greed that we want higher returns, then that greed comes out with some risk, and we generally tend out to take more risk if we have the greed. So I think equity mutual fund schemes are playing their roles very well, and they are managing the money of investors in a very right manner, and they generate the desired kind of returns. I'm not saying this kind of returns would repeat in the future. Probably in the future returns would be lower than this, but I think in last 25 years average inflation in our country was close to 8 9 10%, right? So your real rate of return is your actual return minus inflation. So real rate of return would be close to 10% in earlier period. Now even if we, not 10%, but yeah, in mutual fund equity schemes it was 10%. But even if we look at the future now, inflation would be around 5 6 7%, because we are a growing economy. So inflation would be around 5 6 7%, and if we look at mutual fund returns, it would be around 12 13% kind of returns we should expect logically. Definitely they may generate higher returns, but even if we look at 12-13% after 5-6% on inflation, still 7-8% real rate of returns are excellently great, because this kind of real returns even are not made in the developed countries or even developing countries elsewhere in the global terms, right? So how will it become? So in past 25 years, India has grown, corporate profitabilities have also grown, and equity returns have been generated in a good period. So in future, if economy grows, then equity can generate good returns. So question is whether our economy is poised to grow. So yes, everybody knows that our economy is the fastest growing large economy in the world, right? We are expected to become second, third largest economy in few more years or decades, right? I think everybody looks, every other country now looks at India, right? And what is the reason of our growth? Our reason of growing in future is the mostly about our 37-year period of demographic dividend. So this article, Times of India article, was published in 2019, but there is a very well-known fact, nothing that article says that was highest working age population India is going to generate for the world. So this country is going to have the highest working age population for next 37 years. And when people start working, they earn more, they spend more, and when people spend more, companies would get more sales, profits, and when good companies make good profits, higher amount of businesses would be demanded from the equity market. So obviously people would buy more equity such good companies, and the prices of those equity shares would grow. And that is not going to be for next 3, 5, 10 years. This country is exceptionally going to grow for next 37 years of demographic dividend, highest kind of working age population we are expecting to have. You can just look at this data, this article published, that in time 1950 we had only, so we, our dependency ratio was 68% that time, means only 30% kind of population was only working population, and 70% population was dependent on the 30% population. Now if you look at, close to 50% population is working and 50% population is only dependent, and our life expectancy has grown, people are working for more years, and we are getting good consumption story. And when this kind of demographic dividend is there for any country in the history, those countries have grown phenomenally well in the past. You can see the different countries in different periods for their highest kind of growth in the history. Our growth is expected to be started from this year. I think it is not going to be 3 year, 5 year, 10 year. It is going to be a very long growth, and all the kind of companies, global companies, know this fact, and they have started coming to India now in a big time, looking at this major reason. So when we have a very good growth in the future, equity returns would be there, right? So market, जो क्वेश्चन था कि मार्केट क्या लगता है, मार्केट बहुत अच्छा लगता है बॉस. If we look at long term, short term we don't have answer, and even nobody has that answer. At short term there may be volatility, there may be a big dip or short dip, or there may be a rally in markets even in a shorter period. But even if we look at longer period, and if we invest our long term investments into equity and equity mutual funds, I think it has very good potential to generate good returns. And when we say equity, so equity is by definition ownership of business. So equity means ownership of business. When we buy good company shares, we become partial owners, and so becoming good companies owners, I think, would generate always good returns. Another question would be, what do investors actually make this return? Investors return बनाते हैं कि नहीं बनाते? Obviously it's a very good question, because mutual funds have generated good returns, but different data points suggest that investors that do not make such returns. Why? Because schemes तो returns बनाती है अच्छे invest करके, manage करके, बट इन्वेस्टर्स कभी कभी पीक में आते हैं जब मार्केट ग्रो हो जाता है, और कभी कभी इन्वेस्टर्स इवन कम आउट of the schemes and funds when markets are not good, right? So people tend to invest irrationally in the markets. So I'm trying to tell you that people try to time the market, that this is the time to invest or this is the time to exit. So that is the only reason they invest in different times differently, right? So we should not time the market, we should keep investing, and we should be there for a longer period of time, right? So this article shows that boss people invested into such schemes have different returns because they have invested for certain period and they would not have invested in certain period. Probably good or bad may differ investor to investor. So I think we have to be investor for a longer period. That's the only way we can make good returns, which actually mutual funds are making. अभी नेक्स्ट क्वेश्चन जनरली वी शुड ask, boss, आप long term बात कर रहे हो, how long should I invest? So that is the question I think is very important, and long term generally is determined by the dreams and aspirations we have, right? So some people would have dream for great home or higher education or kids, peaceful retirement or dream car, or some investors we meet, they have dream of building good wealth for next generation or building wealth in the lifetime, right? So some HNIs would be having a dream of making 100 crores in next 20 years or making 500 crores in 20 years, or leaving a legacy. Or I met a doctor, I think 7 years back in Navsari. He told me that, boss, I want to build a corpus for my son. I'm expecting him to become a doctor, and I want to build 7 crores corpus after 7-8 years, right? So that's why I'm making SIP since last so many years, and I want to add more money to build that corpus, and I'm expecting him to become a doctor. So I expect him to start with a good hospital, and that hospital would cost some amount. So I want to have that need. So when we have specific needs defined, that becomes a purpose. And if we invest with some purpose, then I think your investments would be aligned according to that purpose, and we remain invested for a longer period, and that purpose can be fulfilled with the equity mutual fund schemes for a longer period of time, right? And जो मैंने बताया आपको कि we have to map our investments in different needs would be having different investments. So all investments should be mapped with a specific need and goal, and we have to track the progress of those needs every 6 months or 1 year. And tracking is rather more important than rather tracking the markets or global phenomena or global things or even NAVs of mutual funds. Tracking the progress of our needs and fulfillment of those needs, I think, play a very big role, right? These are the things which are in our control, and not the things of like election or oil price or the other things which are not in our control. These are the things we know, and these are the things I think we should always track our progress to keep invested into the mutual fund schemes. And if we look at our own NJ eWealth account, I am sure, I think some of you would be NJ investors. Then this account of investor is always showing the track and progress of the needs, that your current investment is enough to fulfill that need in a longer period, or is that any shortfall or not? And if there is a shortfall, what kind of monthly investment I should add, or what kind of lump sum investment I should add? So those tracking and progress should be inbuilt in the tracking progress mechanism, and it is always there in this tool, right? Abhi, next question would be, that's great, I will start my SIP from next month. So generally people tend to delay the investment, so right, so if the delay happens, what would be the cost of delay? So if someone would have started SIP of 10,000 rupees before 15 years, investment of 18 lakh rupees in last 15 years would have become 58 lakh rupees, right? But if somebody would have invested after 1 year, then in last 14 years that investment would be just 16 lakh 80,000, but investment value would be just 49 lakhs. So you would have been investing 1 lakh 20,000 lesser, but your value would be 9 lakh 27,000 lesser than the actual if you would have started 1 year earlier, right? So delay cost is much higher, and that cost is much higher if you are there investing for next 19-20 years. Delay of just 1 year of for 10,000 rupees SIP would have been a big cost in terms of delay, right? These are very simple things. I think some of you would be telling me that, boss, these are all simple things we all know, right? But if you ask me that what NJ has been telling the investors since last so many years, we have been telling these simple things and boring things to our investors time and again. We don't talk about markets, we don't talk about different macro factors, we don't talk about short term things. These are the basic things I think we need to keep repeating, and that is the only where I think our patience is getting ingrained in our blood and our thought process. I think that is the only way to build wealth in a longer period. If you look at 20 years SIP performance of 10,000 SIP would have become 1 crore 23 lakhs, 2,000 would be 24 lakhs, and 50,000 SIP if someone would have started 20 years back, the value today would be 6 crore 18 lakh rupees. So the delay cost or cost of lower conviction, right? If you have the potential to invest, let's say 50,000 SIP, but if you are starting 10,000 today, then probably there is a possibility that there is a low level of conviction. Conviction is always there, but not at the utmost level. So that lower level of conviction can cost much higher amount in the future. So I think interaction with the distributor is very critical to have the good conviction. Abhi, next question would be, please suggest me good schemes. Which schemes should I invest in mutual funds? So there are different categories of mutual funds: large, mid, small, flexi, tax saving, international category of funds are there, sector funds are there, right? So there are good number of categories, and there are in fact more than 700 equity schemes today. And which schemes are good for me, for my need, and those good schemes for me may not be good for another investor. So everybody has different risk profile, different time horizon, different needs, different emotional aspect of investing, right? So I think this aspect is very critical, and we should not get into, I think, selecting these schemes on our own, right? So we have seen in the past that good funds, if the funds are doing very good and performing funds, top 10 funds or top 5 funds, which we can even get all these funds from the media, right? Various websites or news articles. But these funds generally, as per our experience, after tend to go down, right? So the top performing funds of today would be in the bottom after 2-3 years, which we have seen through different data, right? So even if you look at this money control article, that in 2012 the top performing fund was this, it was there for particular period, but today it might be a bottom fund, and the bottom fund of that time would be a great in between, would be great for this particular last year. So every fund has different cycles, right? Best performing fund of today may not be best for tomorrow, and these are different article of Economic Times, Live Mint, or Money Control, that chasing top performing mutual funds is not a good idea, right? Don't chase the fund that won last year, and don't chase recent toppers while choosing mutual funds. So now your next question would be, what should we do? We should not look at the past performance because it's not a guarantee of future performance. And consistency in relative outperformance against the peer is also far from reality. So this is slightly technical, but what should we do? We all know that all funds rarely perform equally well at times. हर एक फंड सब टॉप पे ही रहा है ऐसा नहीं होता है. So that's why it is very important to diversify into different funds with different styles and categories, right? And we need to it generally helps balance near-term performance goal gaps, because few funds in few times would be not doing good and few funds would be doing good, and the time changes, I think it reverses, right? So it is important to have different products into our basket, so it balances out the overall different factors, right? So आप जब लॉन्ग टर्म के लिए रहते हैं तो ये आई थिंक चीजें निकल जाती है. इन अ लॉन्गर पीरियड वी हैव सीन दैट गुड परफॉर्म the AMCs which are serious in the business, right? Most of the funds into diversified category have generated similar kind of returns. If we look at 20-year returns, all the returns are like similar kind of returns. But if we look at the specific short-term period returns vary for fund to fund. But if we look at longer period, most of the funds have generated similar kind of returns, right? So it is rather more important to stay invested rather than to choose any particular fund. And next question would be, what kind of different styles and categories for me? What is the kind of portfolio I should make for my goals and my risk profile? That's when I think a mutual fund distributor plays the role. So I think mutual fund distributor is a certified mutual fund certified distributor. He is mostly in this business. He knows, he gets trained, he gets knowledge and updates of what he should do with the needs and risk profile you have. So I think he can tell you. I think interacting more with the distributor, meeting out him more, can give you more, I think, proper portfolio, and that portfolio should be a long term. I think the role of distributor is to ensure that you remain invested into different styles of different markets, different ups and downs. I think you stay invested, you remain invested. His role is to control your emotions and behavior rather than to choose the funds. Choosing the funds is one part of the distributor. I think the biggest part of the distributor is to control emotions and behavior of the investors. I think that's when the difference is made in the investor's life. And the distributors generally are trained to review the needs and trained to track the progress of the needs and family needs, which we talked previously. They generally guide you in different times. They ensure that you are keeping invested, you are having good asset allocation into equity as per your need and the requirement, right? So generally they can understand much better and they can customize solution for your risk profile and your need, right? The next question would be, अभी मेरे पास पैसा तो है बॉस, but should I invest full amount today or should I invest staggeredly? थोड़ा थोड़ा करके डालूं, पूरा डाल दूं, क्या लग रहा है? तो this question actually correlates with the previous second or third question, market क्या लगता है, right? So I think we need to ensure that we don't try to time the market कि market अच्छा लग रहा है, नहीं लग रहा है. So we also have learned this fact over a period of time. These are our learnings, that we should not try to time the market. We need to ensure that we follow our own asset allocation. Asset allocation is not something that we invest few a percentage of investment into equity mutual fund scheme and some percentage of investment into debt mutual fund scheme. Asset allocation means by how much allocation in overall net worth we are investing into equity kind of products and other debt kind of product. Debt means your FD, post, PPF, even debt mutual fund and even bonds. And equity means equity or PMS or probably mutual fund equity schemes. So if you have a net worth or let's say 5 crores or let's say 2 crores, so in entire net worth of 2 crores, if you have invested let's say 30 lakh rupees in mutual fund equity schemes, then your own and next 1 crore 70 lakhs is invested into FD, then your equity asset allocation is 15% and your debt asset allocation is 85%, right? So that allocation may be good for you or may not be good for you. That I think mutual fund distributor can define, because what is your need, that's where I think you need to define the asset allocation. कि बॉस मुझे अगर मेरा रिटायरमेंट अच्छा करना है या चाइल्ड एजुकेशन, मैरिज के लिए एनी एस्पिरेशन आई हैव, what kind of percentage equity allocation I should have, right? And once we finalize that equity and debt allocation, asset allocation in the overall net worth, we should rebalance that asset allocation every year. So if the equity allocation goes high because of the market rally, after a completion of 1 year, we should rebalance that. If let's say 30 equity and 70 debt is defined, then after 1 year, 30 becomes 40, then 10% should be allocated to debt again, right? So your risk is aligned with your equity and debt asset allocation. I think asset allocation is the only place where we can have good patience and discipline in our investments. अभी जनरली डॉक्टर्स को मिलते हैं तो जनरली ये क्वेश्चन ज्यादा आते ही है कि बॉस व्हाट काइंड ऑफ स्टॉक्स शुड आई बाय, राइट? सो वी नो मेनी डॉक्टर्स दैट दे invest directly in equity stocks. So let us look at this. Yes, you can, but इसके लिए you need higher time, you need to spend higher time to understand which kind of businesses are good, which kind of businesses would be able to generate good profits in future, or actually which kind of companies have actually generated consistently highest kind of profit growth in the past, right? Companies are good, not having debt, companies are not making any different malpractices to generate good returns or profits. So there are so many things to look into before investing. If we have time to spend the time, I think mutual funds is a big process and big team which actually are doing, and the experience is extremely good. जो हम 25 साल का experience भी देख रहे थे, the kind of returns they have generated, I think individual investors, and individual investor nobody can replicate that, right? Abhi we need to understand, are we a trader or investor? Because when we look at the data published by SEBI, which is a market regulator, equity market and capital market regulator, even SEBI regulates mutual funds. So SEBI did a study last year that 89% retail traders in equity, future and options suffered losses, right? So people do not make money. That is the study published by SEBI itself, right? Even if you look at the cost of ignorance, which is very high, right? And if you look at, this is the Economic Times article published in February 2022, that retail investor even loses money even in direct equity. Apart from FNO, even in direct equity they do not make good returns. So this is the public study and public research Economic Times published. I'll not go much into detail, but generally even this article, very old article, probably 2019 article, which says why retail investors lose in direct equities. It's just because they tend to follow the good markets and everything, but जनरली जो अच्छा चलता है उसमें लेते हैं, बट जो फॉल होता है उसमें जनरली लोग बेचते नहीं है, right? So thousands of crore of equity wealth at risk as retail bets in falling knives. Generally, when the prices are falling, people tend to invest more, and generally that's where I think people keep. So people tend to have been investing in those shares where returns are not great, right? So probably if you name few companies like Suzlon, or let's say Reliance Communications or Reliance Capital, or few other names where prices have corrected by 90%, 95%, and those kind of companies are today having highest number of shareholders. Some of the companies, such of the companies are having the highest number of shareholders, and the companies which have been generating excellent profit growth are having very low number of shareholders. Why? Because people tend to invest in such companies where they feel that returns would be made quickly, right? So these are some of the study and articles you can see. This is very interesting and one of my favorite articles, which I generally show every investor meet, because this article was published in Economic Times in 2018. So what this article says that was in 2008 March, market was at peak of close to 21,000 at that time. In that time, these were the favorite stocks of the investors. Some of the favorite stocks were like Unitech, राइट, वीडियोकॉन, अबान ऑफशोर एंड एमएमटीसी, सुजलॉन जो मैंने बताया, रिलायंस कम्युनिकेशन और राइट सम ऑफ दी स्टॉक्स, और जिसने ये 1 लाख रुपया ये सब स्टॉक्स में लगाया होता, द वैल्यू in 10 years, March 2008 to March 2018, value would have been 1,000, 2,000, 10,000 or 15,000 probably, right? So after 10 years, these companies had been having much higher number of shareholders because people did not sell any time, expecting that sometime it would start recovering, right? So जनरली ये क्वेश्चन ये यहाँ पे ये भी है कि बॉस लोग ऐसा बोलते हैं कि मैं तो क्वालिटी में इन्वेस्ट करता हूँ बॉस। आप तो अभी एफएनओ की बात की, आपने बात किया कि आप तो खराब शेयर में लगाते हैं लोग, मैं तो खराब में नहीं, मैं तो अच्छे में लगाता हूँ। सो दीज आर द कंपनीज in a bad shape today, but these are the same companies which were in a great shape in 2008, right? So us time those companies were termed as quality, the most good quality companies that time, and that quality had an expiry date, right? So even if you invest in a good quality businesses, it needs monitoring, it needs a right professional eye which is always keeping eye on those businesses and everything, right? And this is, I think, a professional job. So I think we should keep that professional job to for the mutual funds which are doing the job very correctly. Now the next question, sometimes we get that I want to stop my SIP. I don't know why, but I think these are the good fact points, I think, where you can clearly see that in bear phase जब market fall होता है, right? अभी तो market बहुत अच्छा है, तो I think this question is not there. But if let's say market corrects after some time, or obviously it would correct because it's the nature of market, volatility would always be there. Longer period it would go up, but in a shorter period it would be always volatile. And if there is a bear phase in the future, that's the only time you get more units in your basket. And when you get more units, that's the time I think you should cherish that I am getting more units, right? And that is only possible with SIP. When market goes down, people generally are not able to invest lump sum money because they feel that market will go down further. But if you have discipline in terms of SIP, then that SIP will keep going, and with the SIP going, I think we get to have higher kind of units in the bear markets, and that those higher amount of units I think generate good returns when markets I think recorrect and return in the good times, right? I'll not go much into data. I think if you need this presentation, we can share this. Now, the question would be, should I increase my SIP or not? So obviously, I think if you can save more, saving habit is always good. And I think India is a country of high number of savers, though our savings generally tend more towards to a fixed income like FD and post and PPF. I think that saving habit is great, but saving habit towards right asset allocation needs more attention. And if you can save more, I think you can increase your SIP. Sit with your right mutual fund distributor and you can increase your SIP as per your family need. Review your family need rather than NAVs and the markets, right? And you can definitely register the top-up SIP in your mutual fund SIP, so you don't need to remember every year that whether I need to increase the SIP or not. This top-up SIP generally takes care of increasing the higher investment every year in mutual funds, right? So higher top-up has generated higher wealth, right? So I'll not go much into detail that normal SIP and with top-up SIP, obviously it makes difference. So 10,000 rupees SIP has generated this growth in 30 years, and 10,000 SIP with just 1,000 additional every year, 1,000 additional SIP. So that is possible with top up, and the difference would be great if we have SIP with top up SIP. अभी आप पूछोगे कि ठीक है सब ठीक है अभी क्या करना चाहिए, तो this is the summary of what I said today in my session. I think very basic session I did not take any complicated and complex things because we don't know complex things. We don't even understand market things and other sector outlook or market outlook or stock specific things. We generally know the basic things, and that's what I think matters in a longer period and to build wealth in the investments, right? So stop watching your valuation report or NAVs, stop watching news. That is the summary. Sit with your mutual fund distributor to review your portfolio and family needs. Make right changes required as per your interaction and review with your mutual fund distributor. Have patience, because sometimes good times will not be always good, right? There will be always testing of your patience, and when you keep faith in equity, I think it will always reward in a longer period. And if you have good time, कि भाई time है मेरे पास तो, but time है तो I think you can focus more on your work, or there are many other things to focus in the world, right? This world is full of other things and opportunities, or doing many other things. Market, looking at markets is not the only thing. So I think don't focus on the markets and short term things. That's what I think I would end up my session. Portfolio performance plus investor behavior. Investor behavior, I think, plays a bigger role than the mutual fund equity returns, right? Mutual funds तो deliver करेगा ही, वो हमें कब मिलेगा जब हमारा behavior सही है, right? And हम patience रखते हैं. And apart from this, I think you need to cover risk for the uncertainties. Obviously, any uncertainty may be there. We need to secure ourselves and our families and our businesses and our profession. I think all of you are doctors. I am sure you would have get insured with your doctor indemnities kind of policies. I think that is very critical. I think Hussaini, my colleague from the insurance division, he took this session last time. So I will not take much of the into insurance, but I think this is all from my side, and thank you so much for giving your time today. And I'm very happy to interact with the esteemed doctors like all of you. And again, thank you for serving the entire generation in our country in difficult times like COVID and everything. Right. So thank you, and wish you again, you and your family, a very happy new year. Thank you. So I'll be happy if you have any questions.
Yes.
Sir, we have few questions.
Right, sir.
Sir, Dr. Abhay Borgaonkar is a very senior physician.
Haji.
Is there any specific guidance for doctors above 70 years? And is it in investment in mutual fund at these age, is it advisable?
Right.
In
so
ETF.
Yeah, it's a very valid question. I think I missed out that point in my session. So normally, I think we have a facility like SWP, right? Systematic withdrawal plan, just like SIP. When SIP we invest on a monthly basis, and similarly, when we start SWP from our mutual fund investments, it is called as SWP, systematic withdrawal plan. So it's a monthly redemption. So taking out systematically from the mutual funds is called as SWP, and SWP is generally preferred in hybrid funds. Hybrid funds are also there in mutual funds. So hybrid funds may, what are hybrid funds? Hybrid funds are like, so one category is balanced advantage portfolio. Another category of hybrid fund is aggressive hybrid portfolio. What this kind of funds do, normally they invest some portion in equity stocks and some portion into debt. Now that debt is very stable, right? So that gives stability to the overall portfolio, and that equity risk is having a risk, but it gives higher returns, right? So with the stability and kind of equity, I think the overall portfolio would generate moderate kind of returns with moderate risk. And such kind of investors looking at the regular income should invest into hybrid funds like balanced advantage portfolio or aggressive hybrid portfolio, and go for the SWPs. So let's give an example. For example, if I need let's say 20,000 rupees every month for my regular kind of expenses, right, and household expenses, then it becomes 2,40,000 a year. So 2,40,000 a year becomes close to, let's say, it becomes, I think, 17 lakhs. I think 17 lakhs if you invest, right? 17 lakhs, 7% if I take, it becomes close to 1,10,000. Sorry, 34 lakhs. So 34 lakhs someone invests into mutual funds, let's say, right? 34 lakhs का मैं अगर 7% पकड़ता हूँ, so it becomes 2,40,000 somehow year, and 20,000 becomes a monthly regular withdrawal from mutual fund hybrid schemes. So this is a pure withdrawal, but if you have not intention to redeem within 2, 3, 4 years, overall principal amount is there for a longer period, at least for 4, 5 years. And if you want just a regular income, you can invest your lump sum money in such hybrid funds, and you can start getting regular income from doing SWP, which is systematic withdrawal plan.
Sir,
I think, yeah.
yeah. Thank you. Very nice explanation.
Second,
One more question.
as there is a direct growth versus the regular growth option in the SIP, what are the benefits?
Sorry, sir, can you just repeat your question?
The direct growth investment versus the regular growth option in SIP is the question asked.
Direct investment into equity.
Versus regular growth.
No, sir. No, sir. It is sir is asking about direct growth SIP versus regular growth SIP.
I don't know what is a regular growth SIP, right? I see.
Think, sir, when it is through the mutual fund distributor, then it is regular and direct ones.
Correct. Okay, I got the question now. So it is regular plan, and there are the direct plans. So when you invest through direct plans, right? So they are available through online different platforms now, right? So direct plans you invest, you save generally a distributor cost, which is distributor commission. And when you invest through regular plans, there is a cost of distributor commission, right? So that is the only difference, and with that difference, I think your returns also would be different with some difference, right? So जो difference regular plan और direct plan के expense में रहेगा जो commission का, that difference is the higher return in the direct plan. But if you ask me which is better, so which is better? Obviously, it is just like getting medicines through a medical store and getting medicines through prescribed through some like you. So obviously there is a difference getting medicines from both the modes. So I don't think I need to explain that. You are better experts into that thing. Yeah.
Yeah. One more question is there, sir. If you have invested in mutual fund and after 4 years, it gives you a good return.
Haji.
So one should book profit or continue for few more years. So basically, I want to ask, mutual funds are for long-term investment goal or not?
Yes, it is for long term, sir. So obviously you need to define the purpose first. Which purpose I want to use this money if I invest, whether I am investing into bank FD, PPF, or even mutual funds. I think purpose should be very clear. When our Indian ladies buy gold, their purpose is very clear that we want to keep, right? Either for jewelry or either for anything else. Generally, gold is not sold. Even we have seen the period of close to 7, 8 years when gold price was not going up, but nobody would have sold that gold, right? So purpose should be very clear. So when we buy real estate, I think generally people tend to invest with a very long-term horizon. And in real estate and gold, there is not a price movement available for every day. The difference in mutual funds and equity market with gold and real estate is just that equity and mutual funds have the daily ups and downs available, and daily numbers are available that whether it is good or bad, right, today. So if you have a purpose attached, that if I am investing this amount for, let's say, my retirement purpose or for my emergency purpose in future or for my legacy or for the hospital I want my child to build after 10 years, then that becomes a purpose, right? So the purpose rather is more critical, and when that period gets over and your need is approaching, I think then it is the time to start exploring why I should redeem and how fast I means what should be the approach I should redeem the money.
In short, exposure should be long term, but it should be there should be goal related also.
Correct. And
Sir,
for
few guidelines regarding SIP in ETF like Mirai Asset, and there's one question.
Haji. So ETFs are like ETF is like the index fund. So these are the very passive kind of products, right? So very low cost product. Again, Mirai Asset Fang ETF is I think it invests into international shares, right? So obviously you can make your investment into international equity through mutual funds like ETF or any other mutual fund equity scheme, right? But not the 100%. So if you have a higher corpus of investments, then you can consider 5, 10, 15% of your total corpus investing into different geographies and different countries, right? Because the highest growth we are looking at in future is from India. But when we look at diversification objective, definitely if we have a good corpus and bigger corpus, then you can always look at the 5, 10, 15% kind of corpus investing into the products which invest into international equity. But still, if you ask me which kind of products like this ETF or other ETF or any other scheme which is good for me or not good for me, I would always suggest you to sit with your mutual fund distributor, have 30 minutes, 60 minutes kind of interaction, then you would be arriving at the conclusion that whether it would be good for you or not, because it might be good for someone, it might not be good for you.
And Deepak bhai, last question, sir. Apurva bhai, which are the good sectoral fund like HDFC recently in last June started HDFC Defense Fund, and looking to the future of our country, whether to go for in HDFC Defense Mutual Fund or not. Any this type of sectoral fund which you advise give more CAGR?
Sir, generally this kind of sectors, obviously when India is growing, obviously there are sectors which would grow faster and there are sectors which would grow in a moderate rate. I think time will tell that the prediction about any sector would be right or wrong. But when we look at sector specific investment, it always have the higher risk, because when we invest into equity mutual fund diversified scheme, that diversified scheme invests into all sectors investment or company, right? So probably 12, 15, 20 sectors it would be investing. Now, whether you invest into one particular sector like defense or banking or let's say ki, pharma, the risk is very, very high. So expecting higher returns always comes with higher risk. So if you are getting good returns in the mutual fund equity schemes, diversified schemes, we generally do not suggest to have higher risk into any kind of sector funds.
Thank you.
Yeah.
So, Hiral.
Thank you very much, sir. I request Dr. Hiral Shah for vote of thanks and concluding remarks. I think there is some problem.
Hello.
Hello.
Am I audible?
Yeah.
One more question to Apurva bhai. Hello.
Yeah, it is audible.
Hello, am I audible?
Yes.
Sir, question is there. Current scenario market remains bullish. more or less since last 1 year, we are saying, we are looking that the market is always in a bull phase. So the inflow of the amount of SIP, is it a single major contributory factor that market remains bullish?
Hello, Apurva sir, you are.
Oh, sorry. I'm really sorry. I don't know how it was muted. So I'm saying that it cannot be said that only SIP book, right, which is the only single most factor in terms of inflow or market ups and downs or market going up. There are many factors which play a role in terms of markets. And you know that there are so many foreign investors investing in India, all from all corners of the world, and all kinds of investing. In fact, there are many institutional investors even in India, like all kinds of mutual funds, insurance companies, or even other companies and banks and other retail investors, and all kinds of domestic or foreign institutional investors have different mindsets, different thought processes. Many other factors play role, right? So we cannot say that this is the only factor, right? But yes, SIP has been a very good indicator of the recent inflows into equity market. But in the past, we have seen, Hiral bhai, that one negative factor can turn around all the good factors, right? So market does not need many reasons or good time to turn out the reasons. So when things are not going great, all good reasons people forget, right? People just need 5-10 bad days in the markets, all good reasons would be gone for toss. And in bad markets only you need 1-2 good reasons, right? So 5-10 good days in bad times generally turn around the markets. So we never know which kind of market trend would be there for in the near term, right? But there would be always volatility in long term, right? If we look at the history, there is a history of equity market of last 130 years, recorded history for the developed countries of almost 17-18 developed countries. And even we have 40 years equity market history in India now. So if we look at all the developed market history of more than 100 years and even 40 years of India, there has been always a volatility in the different periods. So we don't know when that downfall would start and for how long it would be there, right? So in COVID time, people started saying that it would be going so much down and for what long period of time, but it corrected immediately and in very short notice. I think it was in a good zone. So we cannot time the market, sir. That is the only thing I think we can say. And one good factor may be a bad factor, or one bad factor can be a good factor in a longer period. But I think, having said all of this, I think long term, having good right asset allocation into our equity and debt, I think that patience plays a very big role. 10 years seem extraordinary well, 10 years, 20 years. So कोई चिंता नहीं है उसमें सर.
Okay, thank you.
Right.
Thank you for a very well informative lecture. Hope everybody will learn something and will be helpful to invest and multiplication of their money. Thank you, sir. Thank you, Vinod Torawala and entire FFPAI for their support and conducting this kind of lecture series.
Thank you. Thank you, sir. Thank you all. Thank you.